Good evening, traders. Welcome back to the channel. This is Vishal, and you're watching Nifty and Bank Nifty short-term view. You can see that the trend of the Nifty spot is up in the daily and in the hourly time frame charts. But one thing which I would like to share with all of you is if I convert this particular chart into a line chart, there is one small thing which is visible, that price has made a higher high. If you check properly, and RSI has made a lower high. Now there have been a series of negative divergences in Nifty spot since the starting of the June, and majority of them have not been working. Does this mean that this will not work? Well, as of now, we don't know, but this is just a sign that the momentum of the market to go higher is lesser. This is the first thing. And this is what the chart is telling. This is not what I am feeling about the market. Now, if we go to the hourly time frame charts, there has been a superb bounce back in Nifty in last couple of days. And it has been on the back of a very firm short-term support in the hourly as well as in the daily time frame charts. Now, if I convert this chart into a ultra short-term time frame, which is the 15-minute chart, you can see that after a pullback, we did retrace and again we started going up. We started going higher. Now, why did we actually come lower today? The reason for that was that Nifty was sensing some sort of resistance at this zone. That is the reason it retraced, and again it slowly and steadily it started going higher. There is lack of momentum over here in the 15-minute chart, I can understand, but nevertheless we ended higher by 40 points in the Nifty and by almost 92 points in Bank Nifty. Now, with a pinch of salt, if we consider that the rally, if it continues and if it surpasses this particular high of 18,890 or something, then the probable levels which could be tested will be 18,940 and probably somewhere around 19,000 levels. You can see there is some sort of line over here, right? As of now, I won't be talking about it. Let that particular level come. Only then it makes sense to talk about what exactly this particular line is. I'll be sharing if this level 19,000 hits. Okay. Now, if Nifty has to go higher, we need to be very, very clear that Bank Nifty has to participate because, sectors which have recently rallied, I'll just show, say for example, Metal Pack. Metal Pack has recently rallied pretty nicely. Now it is at a resistance. You can check that this is the 61.80% Fibonacci retracement and there is a previous high over here. So it has hit a resistance. If anyone is holding short-term trades in Metal Pack stocks, it makes sense to book at least partial profits over here. You can even witness some sort of negative divergence in the RSI, right? Second thing is energy pack, oil and gas, energy. If I convert this particular chart into a daily time frame chart, and if I zoom out, you will be able to see that we have hit a resistance. And again, if I convert this chart into a line chart, we can see that we have a higher high in price, lower high in RSI, which is a sign that upside momentum is getting weaker. It is not a negative divergence. It is just a sign that upside momentum is slightly weaker, and there is no doubt that we have hit a firm support now, a firm resistance. Now, this was earlier a firm support. Now it has become a resistance. So again, if you're holding stocks like Reliance or IOC or any other stocks from the energy pack, it makes sense to book partial profits over here. Another index is like Auto Pack. Like Auto Pack has also rallied pretty high. Yes, I can understand that yesterday I shared my view on Hero MotoCorp, but still this view has not yet triggered. We need a breakout in the hourly time frame charts above 2,900. It is bouncing from a support, that is okay, but just a bounce back makes no sense. We need at least a hourly closing about 2,900 in Hero MotoCorp. But other than this particular stock, if you look at the Auto Pack, it is pretty much overstretched. Just look at the RSI. So we need to understand that if Nifty wants to go higher, Bank Nifty has to participate. And if you check the daily time frame charts, yes, 43,100 is holding like a firm support. I can agree with all of you, but it also needs to be firmly understood that the prices need to rally higher. We have been able to surpass this resistance, this particular resistance which I have drawn over here, the horizontal band, but we need to stay above it, surpass this level of 44,000, even this level of 44,300, and stay higher in this zone. Once we start staying higher in this particular zone of 44,400 or something, then things will change. Because if I open the weekly time frame chart of Bank Nifty, even Bank Nifty has shown a lot of resilience and it is not ready to come down. That is fine. That prices are not ready to come down, and you can see a fair bit of consolidation of almost 1.5 months. That is fine. That is really good. But we also need that the momentum should continue and prices should rally. Only if this happens, then this will be able to support Nifty, and then we'll be able to see Nifty, trending higher close to that 19,000 mark. Once again, in my today's video also, I'll be saying the same thing. This is certainly not a market to go gaga and just trade each and every breakout from every sector. Be very, very stock specific. Pick your sector, and even after picking your sector, make sure that which particular stock you're trying to trade. Like say, for example, I have been saying clearly no about Infosys in IT pack, and you can say it's completely lackluster. But I shared my positive view on HCL Tech in many of my videos. HCL Tech is, going higher. One another stock I've been speaking about in my videos, and that's Tech Mahindra. You can see Tech Mahindra has been able to surpass and it's trending higher. So it makes sense to be stock specific as of now and certainly trade less. All right. So I hope that these videos which I'm sharing daily are helping you to understand how markets will move in the next few days. Trade safely. Take care, guys.